Hello everyone, and thank you for tuning into the North Main Minute. I'm Joshua Doby. I don't need to tell you, if you're following the markets at all, especially over the last year or so, there have been a lot of ups and a lot of downs. But frankly, last year ended up, as far as the indexes are concerned, quite a bit higher than I think many folks anticipated, especially with regards to the impact of the coronavirus earlier in the year on the markets. But what does all that mean? Well, a couple of big things that you want to keep in mind. First of all, be wary of what we just call sometimes frothy stocks. Those kinds of stocks which almost seem to be parabolic in terms of their ascension, just growing at great guns way above where normal market performance is. Doesn't mean they're bad companies. It doesn't even mean that they don't deserve it. But just be wary of them, because even if they are on that kind of trajectory, they can't keep that pace in perpetuity. So you want to be mindful of what's happening there. Be wary of them as you're doing your analysis. Which brings me to the second point. When you're looking at the most popular indexes out there, and I'm just going to name a couple here. There are hundreds of them out there. Dow Jones Industrial Average, S&P 500 Index, NASDAQ Composite Index. Understand how those indexes are put together and how they move. I'm not going to get into all the details. You really need to understand, though, that the Dow Jones Industrial Average, for example, is price weighted. More expensive stock, going to move the Dow more. S&P 500 Index, market capitalization weighted. Bigger company, going to move the S&P 500 index more than a smaller company. Very, very important to keep those kinds of things in mind, because you may say, well, the market's up today. Well, it may be, or maybe just a couple of the bigger companies, more expensive share price companies are moving, and maybe, coming to the third point, they're covering up some other stocks which aren't doing as well. And we actually saw that last year. Even though the indexes almost across the board had some significant appreciation last year, a lot of those indexes were covering or hiding a host of companies that really didn't do well. Doesn't mean the market's in a bad place, doesn't mean those companies that did well didn't deserve it, but it's very, very important that you understand what may be the ratio of companies that did well to companies that didn't do well, to understand really what's happening in the overall market. That's going to require you to pull the layers of the onion back a little bit, and that's a very important thing to do when you're looking at your portfolio in relationship to the market. If you'd like to reach out to us at North Main Financial Group, perhaps to do a dive into your portfolio to really understand what you own. You may think you own a bunch of stocks and a bunch of funds, but perhaps you have some overlap and you don't own that much at all. Very common thing that we see here at North Main Financial Group. If you'd like to chat about it, reach out at northmainfinancial.com.